Hello, everyone, and welcome to the Buck Stops here. I'm Catherine Murray. Well, I wanted to provide you with an update on U.S. politics, the U.S. economy, the Fed, and also importantly, Canada-U.S. relations, and a little bit of a market update as well. Who better to bring all of you that information than the former U.S. ambassador to Canada, Bruce Heyman, and also who is now the co-chair of the Canada Institute in Ottawa. Ambassador, wonderful to be with you again. It has been a while, that is for sure. Nice to see you, and thank you so much for joining us today and bringing us all your insight and information.
It's so good to be with you.
Thank you. There is a lot to discuss. Let's get to it. I want to get your views post the U.S. midterm elections 1 week following the vote. What's your read in terms of how we should be thinking about U.S. policies potentially going forward? And also, of course, we've heard from President Trump announcing his race once again.
So the good news, which I think came to a surprise of many political pundits, the good news is that democracy has not only survived but thrived during the midterms, and that people sat back and recognized in almost all demographic groups, they recognize that there is no equivalency to inflation at the gas pump or food prices and democracy taking away women's right to choice or throwing away the rule of law. And so I don't mean to minimize the pain that we've all experienced in both of our countries and around the world from inflation. But, we can fight another day, and we'll continue to. But if we lose the rule of law and democracy, then we lose just about everything. And so we saw unbelievable turnout in all these demographic groups, especially youth, which is historically not turned out. And so if you want to be optimistic about the U.S. election cycles going forward, youth coming out at the midterms is a good indicator of perhaps youth turning out in 2024. And so this is a really positive trend. And so good news, the losses in the House were small relative to historic norms. A sitting president historically loses about 28 seats in the House. Looks like you're going to lose a handful of those. Yes, it will be under GOP control, but it'll be a very narrow control. And the surprise, I think, is that we've so far picked up a seat in the Senate side, and so which ensures Democratic control of the Senate. So you'll have a divided Congress, and it will be, I think it has an opportunity to really work effectively, but it's going to be in the hands of the GOP and their willingness to compromise or work together with the president on accomplishing outcomes. But this is good news. And so I think there was a huge exhale by a lot of people who are very worried about what could potentially have happened in this midterm that didn't happen.
Right. What do you think, and it is early days, but what do you think this might mean for the 2024 presidential election? And who do we think will really take hold in terms of running? It's early, but what do you think?
Well, it's early, yet even as early as it is, we have the former president making his announcement this week that he's in the game. I think the Republicans are going to have some real challenges within their party. Do you embrace this former president and his extremist perspectives and views? Or do you, is the fever broken and do you now move on to the next generation and hopefully find normality within a two-party system? And look, I think it's important that we have a strong and effective and healthy GOP with the Dems working together, debating and thoroughly going back and forth, but not hating and not, causing insurrections and not throwing out the rule of law, but protecting our democracy while still debating it. I think that Joe Biden probably going to run again. I think that the midterms only, re-enhanced or enhanced his perspective of his leadership during this time. And while polling was down, I don't trust polls so much as we all saw how
Yeah.
polls even looked
Yeah.
going into the election.
All right. We'll take a quick break. We'll be right back. Ambassador, so we have a bit of a picture in terms of what's going on from a U.S. politics perspective, and therefore perhaps what policies we might see going forward with the divided Congress, and perhaps President Biden faring better in the midterm elections. Let's talk a little bit, though, from an economic perspective, because people did think that the economy would be more of a focus versus, as you say, democracy. It is really interesting in terms of those results. But let's talk about the economy. And what you see occurring right now, it's so difficult, I think, to get the right read because, you do see companies laying off, particularly within the tech sector. I think we can see people feeling the pain of higher interest rates and higher gas and food costs. And yet we have a U.S. Fed that continues to raise rates. Maybe they're going to pull back a little bit. What's your read on the economy, and what do you think the U.S. Federal Reserve should be doing right now?
So let's rewind the clock a little bit and look back at what was taking place. When COVID hit and all of a sudden businesses were shut down everywhere, we had isolation mandates taking place. We didn't have a vaccine. We didn't know what to do. Everybody needs to pause a minute. Remember, in the US, we lost more than 1,100,000 people during COVID, and families and businesses and people and communities were so dramatically impacted. And during that time period, there was fear that we were going into a depression-like environment with tens of millions of people losing their jobs overnight. And so two things happened simultaneously in the US. The Federal Reserve took interest rates down significantly. They did quantitative easing. They flooded the system with cash and money. The federal government ended up passing legislation that did PPP. They ended up pushing a lot of funds and a lot of fiscal spending. So now you had a fire, think about it in terms of a fire, and you had the fire departments coming in, putting untold amounts of water to put the fire out. Right thing to do at the time, because if this fire had taken hold, we would have burnt the house down. So now we had so much water put in that we're now having huge amounts of water damage now that we're going to have to deal with. And the Fed now has realized, with inflation picking up, as well as I believe Congress, but the Fed in particular, is, well, we went way deep, we had to, but now we've got to pull this back. And when they figured out that inflation is now not as transitory as they thought, they're having to bring rates up significantly to kind of mitigate or slow down these inflationary pressures. We're all feeling it. Grocery stores, products we're buying, things, everything. There's shortages, there's supply chain issues. And so the Fed has indicated that they're going to continue on this path until there's distinct evidence that inflation has been knocked down. And now with a divided government, I think the likelihood of huge excess spending from Congress is now much lower. And so we're likely to see a slowdown, whether we get into a technical recession, a bad recession, a mild recession. Nobody really knows, because we really don't know how much the Fed needs to raise rates to nail this inflation and put it away, or at least take it down into the 2% range. And so all the most brilliant economists that I know, 6 months, 8 months, 12 months ago, never were predicting we'd be where we are today. And even our former employer, Goldman, has raised its projection to 5.25 now, going into early next year. I don't know whether 5.25 is the right number or wrong number, but the Fed is determined to keep raising rates until things, until this inflation is knocked down. And some people fear it may be, a lot.
Do you see that this has been hurting Americans, though? That's my concern, the higher costs. And I don't know that raising rates, particularly for people who, went out on the risk curve, as so many people did, I mean, they're the ones that are really, being punished and losing jobs and not being able to pay their mortgages. I mean, how much of an effect do you think we're going to be seeing on that front, or are already seeing?
So think about it this way. Recessions, by the way, are part of the unfortunate normal cycle of things. We'd love to have no recessions ever, but it's a course correcting mechanism that happens in economies. Um, when you have unemployment, and right now we're at 3.7%, and if it goes to 6% or 6.7%,
Yeah.
3% more of our population will feel it. When you have inflation, everybody feels it. And we got to knock that down.
Mm, fair point. We will take a quick break. When we come back, you did mention we both worked at Goldman Sachs together. We'll get your views on the markets and also, of course, Canada-US relations. We'll be right back. Ambassador, just to pick up on our previous segment in terms of the view, we've got to fix inflation. It does impact everybody. If that's the case, and we do continue to see the U.S. Federal Reserve raise rates, what do you think that means from an investment perspective? We've actually seen the markets find some strength and some stability lately, believing that the U.S. Fed Reserve is going to pull back. We'll see what Canada does. What's your view on the markets these days?
So let's pause just a second and talk about risk, and then talk about long term versus short term. Long term, I would say there is no better or stronger economy in the world, and I think we're stronger yet on a relative basis relative to every other country in the world. You want to be invested in the United States of America. And 5 years from now, 10 years from now, and if you're young, 20 or 30 years from now, this will be an ideal time to put money to work. But if you're putting money to work that you're going to need next year, in 6 months or 8 months, there's a lot of risks out there. And while I believe in the long-term market of the United States of America, short term we have a Fed raising rates quite a bit. We have a war going on in Europe. We have bouncing relationships with China taking place. You have the Middle East. You've got all kinds of things taking place. And then you have this confluence of now people starting to run for president, which is going to, I think, increase tensions domestically, politically. So there may be a bumpy road for the intermediate and short term in the stock market. And you'll have these rallies that'll come off of lows. And then when it looks like inflation's still chugging along and the Fed has to raise rates, more people act very surprised and the market will go down. I think you're very choppy here, very choppy near term. And look, some of these tech companies that are laying off that you've mentioned, they added tens of thousands of jobs over the last 48 months, 24 months, 12 months. And so during that time period, they went too far. And they hired way too many people thinking the economy was just going to keep extending at the path it was during, post COVID or the end of COVID. And they're now realizing that things are not, and we may actually go to a recession. So they have too many employees and they're going to pull back. It's unfortunate for a number of people who took those jobs, and they're going to be impacted by it.
Yeah, fair point. So bumpy road ahead, but of course, the United States is still an incredible place to invest long term. Let's shift focus here a little bit and talk about the Canada-U.S. relations and your role in co-chairing the Canada Institute and what you're working on there. What are the key issues that Canadians need to know about right now?
So, as a bit of background for everybody, the Canada Institute, which had its board meeting in Ottawa this last week, based in Washington, part of the Wilson Center, is one of a handful of countries that the President Wilson Center focus on. Nonpartisan, receive some funding from the U.S. government, also contributions. We at the board level, working with our executive director, Chris Sands, which many people in Canada know, are focused on the key issues that are critical to Canada and US. And that is just covers the full spectrum of all the things. Our goal is to work on enhancing the Canada-US relationship. We recognize how important it is to both Canada and the US, and we're supposed to help inform not only the government, but we're informing business and other communities. So those things focus on this is the largest, richest trading relationship in the world, but we want to make sure that it's protected going forward. We saw a bumpy road in the NAFTA renegotiations. They could be bumpy coming up ahead as a new president or an old president coming back could have an impact on that. So these are the kinds of things that we're focused on: border, trade, geopolitical issues, role of Canada working with the US. It's a lot, and I'm
Mm.
really pleased to be a part of this organization.
It is a lot. I want to pick up on what you said in terms of nobody would be able to believe that we're actually going to be looking at NAFTA once again and that there could be potential risk to NAFTA. Remember all the uncertainties surrounding the NAFTA renegotiations under President Trump. We're going to take a quick break in a few minutes or seconds, I should say. But what's the quick one-liner there? 2026?
All three countries have to sign on to affirm NAFTA in 2026. The risk is that Mexico is not holding up to the agreement, and somehow the U.S. doesn't sign on, and then messes this whole thing up a little bit.
Okay, we'll take a quick break. We'll be right back. Ambassador, can you just describe a little bit, because this is so important. I mean, we were reporting on it daily with respect to the NAFTA renegotiations, and so many CEOs across the continent wondering what's going to happen next. Am I allowed to export my auto parts, et cetera? So why is it that this is coming up again in 2026? Can you describe this for people?
So it was built into the agreement that in the 5-year period after enactment, on the 5-year anniversary, you come back and the three countries had to affirm staying in this agreement the way it is. It doesn't end it on that day if a country doesn't sign on, but it then forces these annual reviews and could put in jeopardy the entire life of the agreement, which would be then a 10-year life of the agreement. But this was put in to make sure that the things that they had all agreed to, that everybody was abiding by the agreement, as opposed to just the arbitration aspects of the agreement where we would just take you to court. You're not doing this, you're not doing
Right.
that. It actually had an out clause that forced people to focus on this. Today, as we sit here today, there are a lot of people that believe that Mexico is not abiding by the spirit or the terms of the agreement as it was written. And those apply to labor standards and wage standards and unionization ability, environmental standards that were built in, and energy and how they were going to open up their energy markets. And now we're just seeing where they're looking to take over and nationalize some assets, energy assets of the US and Canada. So Mexico better get its act together, and it better get it quickly so that they can be, a willing, able, and equal partner to this agreement. And if not, there's some risk, regardless of who's president, that there's some risk that they don't sign on to this the way. And unfortunately, then Canada gets caught up in this mix because they're party to this agreement. And I spoke to a number of CEOs of the very largest companies who said that would be a chill if the U.S. doesn't sign on to this agreement, and they would then tilt more of their investments domestic U.S. than they currently are, which would be unfortunate for the Canada-U.S. relationship, which is my primary focus. So my fear is what's happening in Mexico may have significant implications for this sign-on. We're still at several. This is just 2022, but
Right.
my point is we should start focusing on this now and get everybody on board so it's no surprise that we wake up in 2026. And it's likely to be a topic of conversation during the presidential campaign. And unfortunately, one former president kicked that off this week.
Right. What do you think is the right way then to prepare? I mean, if this is a possibility, and your focus with the Canada Institute in terms of strengthening the relationship between Canada and the United States, what might we do from a business perspective, partnership? What areas do you see us aligning in further to further strengthen the economic tie without
Hats off,
Mexico?
yeah, hats off to Canada, who really, during the NAFTA negotiations, did a whole of government approach to the US, including both, all the parties, I say both, all the parties, and the premiers, and mayors, and everybody, all hands on deck. I would say
Yeah.
over these next 2 years, all hands on deck. Get your mayors, premiers, and business leaders to focus on Republican governors, Democratic governors. Go into those communities. We're seeing radical right using Canada and poking Canada and right-wing media over the last, year. And we're going to have to get ahead of this and not be complacent about it if Canada wants to, protect that trading relationship. It's going to take some further work, I think.
Okay. Appreciate that. Ambassador, it's interesting as well. We've seen some CEOs in the United States come out and say how social media has really inhibited discussion, two-way discussions, and the importance of that, and that it's really hurt democracy. And when you talk about, certain groups poking other groups, I mean, that's why I'm bringing this up. It just came to my head that, enough is enough. We need to sit down and have proper conversations and civilized conversations.
Let's hope we have it. Twitter, keep your eye on that. Either it implodes or they course correct and they survive. But, this is going to be an example of how that rolls out very soon over the next few weeks.
Absolutely. Ambassador, great to be with you. Thank you so much.